Hey everyone, before we get to the charts, yesterday I did a webinar about routines and habits and their impact on flow state in trading. That's going to be linked in the comments of this video. Check it out. Hey everyone, Charting Man Dan of the Chart Guys checking in on the broader market. So the bulls continuing their control over the last few days, grinding up. There was a bit of rotation going on today, just in the sense that the financial sector was dropping a bit, IWM pulling back a little bit, NASDAQ staying strong. I personally wasn't trading today, got some friends in town, but we'll check back in on the action. So S&P 500, again, keeping it extremely simple, which is what we always want to do. Eliminate emotion, clear, defined statements. I am not bearish the S&P 500 as long as we keep setting higher lows. Break those higher lows, I'll flip over to Team Bear. But those are a very clear stair-step higher low pattern that I'm going to be watching from here. We've got the FOMC reaction high has been broken, and now the next level we're looking at is 40.75 here on the futures, which for SPY, 405.90 is the level we're looking at. SPY just has a real nice hourly uptrend. We can see from the low of Wednesday, Tuesday? Low of Tuesday, higher low, another higher low, and just keeping that hourly uptrend going. When we lose the hourly uptrend, we will zoom out and watch to see if the bulls are able to maintain that daily uptrend. Decent amount of space right now, in the sense that we could pull back over 2% and still be holding that daily higher low. The NASDAQ is confirming the daily bull flag right off EMA 12 into continuation. This is notable. This is the NASDAQ hitting the highest level in something like 7 months. The last time we were at this level was back in end of August. So 4 months plus 3 months, 7 months. 7 months highs. That's very notable. Fear is being alleviated to a large degree. 4-month bounce is now underway, and I'm going to be watching for a 4-month lower high to be the most likely result of this bounce, but watching the daily from here. Anything above, for QQQ, anything above 304.77 is a daily higher low, and bulls definitely want follow through, because if we don't get it, we're going to be watching, for some kind of rising wedge type of pattern, but it's strong. 2 gap up opens in a row. If we gap up open tomorrow on SPY and QQQ, it will be a bearish reversal 3 gap up pattern that we'll be watching very closely. But then again, we'll just watch for the daily higher low to try and form. Semiconductors, bull flag. Well, I wouldn't really call that a bull flag. Let's see, just out of curiosity. Retracement size, 50% from there. If we were measuring from this other level, yeah. Not a bull flag, but continuation. Again, same thing. We're watching that rising wedge on the weekly time frame. I'm not dead set on this pattern. I'm not confident in this pattern. I'm watching it for the possibility that it presents itself. So if we see a rejection from here into daily consolidation, I'm going to keep watching for it. But again, 2 gap up opens. Anything above 246.43 is a daily higher low. Space to maintain the uptrend from here. NVDA has not broken resistance just yet. So a little bit different of a look, but still a clear daily uptrend. Again, the burden's on bears on all these names, on all our team bull names from when the financial sector situation started 2 weeks ago. They are all still setting daily higher lows, and if that does not change, the bulls are comfortable and bears are uncomfortable. Tesla, the weakness, the relative weakness is continuing here. A little bit of green today, but certainly not as green as even the NASDAQ was. So daily resistance of 197.39, capping the price. We topped out with a double top at that level. The bears would have to see a break of the low of today, tomorrow, for a pullback into daily consolidation. And mostly just a sideways tight range. But again, clearly, it's not doing the same thing as the semiconductors, and it's not doing the same thing as our lead tech bulls. You look at a name like Apple. Apple just hit the highest level. Same thing as the NASDAQ, hitting the highest level in 6 months or so. Microsoft, did we confirm the bull flag? Yep. So Microsoft getting the highest level in that many months. INTC, there's the follow through. Nice bull move yesterday. Very clear resistance zone. Forget when I highlighted this, whether it was in a morning live stream or what, but there was a clear resistance zone and we blew through it. Nice follow through. So again, these NASDAQ names are really strong, and Tesla is not seeing the same kind of strength. BABA, nice continuation. again, the monthly high or low every up day is just looking more and more likely. We will need to see a daily uptrend confirmed still. A lot of space for a daily high or low. I'll be watching for an hourly back burner. Aggressive bears are keeping an eye out for daily consolidation, but we're going to be looking for first hourly oversold conditions to try and mark a daily high or low on BABA. NIO had beautiful follow through on its inverse head and shoulders. Again, just the laggard mindset. So, okay, if BABA is breaking out, other Chinese names, let's check in on NIO, which I haven't been doing. I've ignored NIO for months. And I used to trade, it was my most profitable ticker of 2021 maybe. And it had a bullish reversal pattern. And it's now definitely back on the menu for day trading in both directions because the volatility is beautiful. So we're going to be watching for an hourly oversold back burner on NIO once we get next daily consolidation. But 8% move up from the low of the day. Even the bears get some action, 3% pullback. Once the daily pullback starts, we'll be pulling back, 5% plus from the high. So I just like the volatility in both directions. But a really nice laggard play. And again, we couldn't look at this and say, NIO is going to be breaking bullish because BABA did, but we could recognize the bullish reversal pattern that was forming and then keep an eye out for it. Keep an eye out for the volume. And so nice to see that shape up. Healthcare sector. So I entered a position on J&J today, and that's because it broke an inside bar bullish. Not an ideal day. And the reason I'm taking this trade is, again, number one, really beat up on the weekly time frame with the waterfall drop. Number two, support zone from previous price action with a lot of action in this zone. Number three, broader market sentiment shifting to the bulls ever so slightly. Nice tight range, and risk is very small. My position size, if 150 breaks, I'm going to stop out, and I will lose less than a day loser. So, my risk is under $4, and what's my reward? My target here would be weekly EMA 12, and I would anticipate that's going to drop down next week, but target up at initial target to take half profit would be up at that 157 level. I could also just look at, if I'm in at 153.60, and if my stop is 150, I need 360 to be risk-free by selling half. So 157.20. And again, that's what I've done with Microsoft from these lows, making an entry back here and selling partial to now be risk-free, and then did the same thing with INTC. So this is my strategy for trying to establish long-term bull positions in my portfolio, my IRA, ideally that I can hold for a decade. I'm not, holding my breath that that's going to happen, but to be in a risk-free trade that you just let play out for months or years or however long, that's what I want to do by establishing my portfolio. So I'm looking to do the same thing with J&J, but we haven't broken bull yet. So I just like the risk reward of this setup. And I would need the bulls to hold the 4-month EMA 12, which we have held for a couple decades at this point, or at least a decade at this point. Not a high conviction trade, otherwise I'd be using more size, but just like the nice tightening range, and need to see the healthcare sector follow through from the first daily uptrend that we've seen in the last couple months. IWM 177.53 resistance being tested, have not broken it yet, and there's a resistance zone on some of our weaker sectors. It's not just an individual level, so I'm looking at this resistance zone that is coming into play. If we reject from it, we're watching for the potential of the inverse head and shoulders to try and shape up, which is just what NIO did. Very similar pattern. And the increasing bull volume is great on NIO for the bulls. That's exactly what they want to see. XLF is like IWM. Again, same thing. We broke 32.05, but it's a resistance zone here. 32.18, 32.05. We opened right above it and then dropped all day. So I'm considering this a rejection from this resistance zone, and we're watching for the inverse head and shoulders. If daily consolidation starts, have to see that happen for confidence to continue to head towards the bull side of things in the broader market, because obviously if we hit fresh fear lows, that can change sentiment in the broader market very quickly. Biotech sector, still weak. Big red day, almost a bearish engulfing candle there, and easily the weakest sector on my screen, down over 2%. I don't know what's wrong with the biotech sector, but it is underperforming for months. Weekly stair-step drop, 2 months in a row now, and just all bears still. Same kind of potential inverse head and shoulders trying to shape up, but the weaker of the week right now. Gold, daily higher low is set, so a real nice equilibrium. High, low, lower high, higher low. Anything under 2003, 2004 is a daily lower high. Clear EMA 12 support on the daily, keeping the bulls in control and expecting this tightening range to break next week. And we got silver still grinding up to higher highs and actually playing some catch up now. So we've been seeing it grind up and play some catch up recently, but today's a notable day. XAU, XAG is dropping hard, which is showing us gold leading the move up and then silver playing catch up, because we know in the strongest metal environments, when the bulls are most confident, silver leads the way. And so this is a good sign. You know, one of the videos I made recently, sometime in the last couple of weeks, I said, if you're a metals bull, you want to see this chart go bearish. And that's what we're seeing now, which is, again, a good sign for silver to be playing catch up, heading towards weekly resistance of 2464, key test approaching, and the miners as well. Again, we saw the miner relative strength on the gap down for buying day, and it's just followed through really nicely. So its weekly resistance of 33.34 coming into play as well. Got to keep an eye on the daily RSI. The daily RSI has struggled to get over 70 for a lot of months, almost a year at this point. And we're going to be heading into that weekly resistance with that daily RSI right up at 70. So an aggressive bear is looking to top fish there. But there is space for a daily higher low to try and form on consolidation. Oil, keeping strong. Had a little pullback day yesterday, but no real follow through. Again, just watching for a weekly lower high at this point. And bulls have the shorter term uptrends still in their favor. They've got a nice uptrend resistance line we can be keeping an eye on here. I'd be watching that. Could be a rising wedge, but yeah, it's worth keeping an eye on. Again, just visual guides. That just means I keep that up on my chart. And if we break 74.37 with no follow through, which is potentially shaping up, that would increase the probabilities that this is a rising wedge. Natural gas, not much to say. Same thing. Stair step on the daily. We're now on day number 12, and that's it. Bears have absolute control as long as the daily stair step drop continues. Nothing changes until that changes. So nice solid week for the bulls, ending the month, ending the quarter. You know, some people think this is just window dressing, heading into the end of the quarter, and then once we're into April, that will drop. Maybe that's the case. Again, those higher lows. Keep it simple. I don't need to nail the top if I'm going to shift to being a bear. The bears can prove to me that I should be bearish, and if they're going to have follow through, then there'll be plenty of time. So that's my mindset, and looking for daily higher lows and hourly higher lows as long as we've got this strength. And definitely looking for some positioning to, you know, maybe I'll hedge at certain points, but there was a point where I exited my hedges in my IRA, and it was a bit premature, but it ended up working out. I forget exactly when it was, but it was when the bulls showed me enough of the V-shaped bounce from the FOMC reaction. And so I will add back a hedge to protect those longs at the first sign of the bears telling me, hey, we're proving something, but for now they're not. So we'll continue to check in on that. I appreciate you watching. I hope you have a great day. Don't forget to do good things.